few clients called me a few days back, and they were thanking me for the move in GMR from 35 to 60. And then they said the 2 days back that they booked profits and they lost out on the last 15%. So I don't know the last 15% when it comes. GMR jumped 15% in a day. And I think that the last mile recovery is still there. So stay put, book a bit of profit, get into large caps. There is nothing called sitting on cash because this is a bull market. You will have enough opportunities maybe coming your way, but you have to see where you can deploy your cash. So I still think like select pockets are going to be outperforming, but in the broader universe, I would still put money on the large caps because I would be having more assurance on earnings, on price multiples, and safety of any correction. I think in the next correction, mid caps will have a faster leg than the large caps. Airline business is doing the best it is ever. You've seen Indigo hit all-time highs and so on. So I still think there is juice in the upside, but a large part of it may be now in because these type of large players, when they come, they do make a top for the time being. You've seen a similar case in IDFC First and so on. But let me tell you, GQG is laughing his way to the bank because he had the courage to buy, Adani stocks when there was no buyer. And that's why when he's laughing his way to the bank, the risk taking will be even more. So you do your own gauge on your risk taking capacity. But I still think GMR can, maybe scale 85 over a period of time. Combined effect of China comeback and steel production at a high, plus the infrastructure story in India means steel is going to be a very, very key conduit. In fact, all ferrous, non-ferrous metals are looking very good. So buy a basket of stocks which include JSW Steel, Jindal, Tata Steel, not to mention that SAIL has gone into 3 figures and that could head towards 125. And please add Hindalco as also a play over there because I think Novelis is performing brilliantly. So a basket of stocks will do well. We, as a disclosure, have Jindal Steel and JSW in our portfolio.
Why Jindal Steel and JSW? Why not Tata Steel or SAIL?
So, Nikunj, we thought that these are better outperformers as far as numbers go, and they were showing you more traction on their margins. JSW, as you know, is the best integrated play in the country, and Jindal has reduced debt substantially. So return on equity became very, very important. I still think Ultratech is headed to 11,000, and I would say that your whole gamut of gas authority, the city gas distribution companies. I'm very bullish on MGL, on Gujarat Gas. These are two names which we like. We like GAIL in that space, and not to forget that in this commodity space, Hindalco is one stock which has already scaled new highs. I think the ferrous, non-ferrous business, both for them on the CT, on the copper smelting part, where the treatment charges, refining charges may be at the highest, and plus Novelis has been an outperformer. I came on your show and I said if there was one mid-cap bank I'd buy in this correction when the RBI move came, it would be RBL. We own it in our portfolio. The RBL has no stake more than 1.5%, and Mahindra comes and buys 4%. This bank is going to be an outperformer on the sheer weight that there is no strategic ownership now. And Mahindra, whatever they may say, there is a strategic interest of upping their stake in financials, and the best conduit could be a bank which is actually no stake over there. RBL's earnings have improved. The new chairmanship of the SBI person has been exceptionally well, and I think the present management and their focus on the NBFC side has been huge. Their finance arm has opened more outlets in the last year than in the last 5 years, which is telling us that their credit expansion or their book and NIMs will be very, very strong. So I would say this is headed for 350. As a disclosure, this is in both my personal portfolio and in our client portfolio. Sugar has been a big outperformer, and I know for a certainty that the molasses or the baggies part of sugar, which is left out of the blending, is being lapped up for more industrial use and so on. So in the end, Balrampur is one of the biggest blue chips, and it will find some buying succos. But in the meantime, people would prefer to get into large cap banks and other stocks which have not done much. So there is a rotation going on. I would still say if you have the sugar stock, stay put. and buy only when the consolidation takes an end. You have to be stock specific, and we've had SRF and RT under our coverage, which we think are going to be key beneficiaries. SRF is the largest player in fluorochemical. It has a direct tie-up with the likes of Bayer, and their other businesses, particularly nylon cord tire and other verticals, are doing extremely well. So we are very, very bullish on SRF and RT. This news on PI industry, I think there will be some time before it gets digested. But overall, the industry seems to have bottomed out. And if there is going to be progress on the China front in other avenues of destocking being over, then I think this industry on the back of a laggard in the last 6 months can come out to be an outperformer. So stock specific, as a disclosure, both SRF and RT are in our portfolios, and we are extremely bullish on them in the slightly longer term. We are very, very optimistic on the oil refining and oil marketing companies. Reliance has been more of a laggard, but I think that will catch up. And the whole basket of crude underperformance will see a large part of the ingredient users do very well. Paints, tires, even auto. I mean, Maruti will be a key beneficiary. Maruti plant is very near my office. Recently, I just had an interaction, and they said this going away of the Haryana workforce problem is being a big obstacle which has got removed. If you are aware, the Haryana had put up embargo on outside labor coming into work. So they said that means a very big boon, and their supply chain is doing extremely well. So as a corollary, weak oil prices, or the correlate of that, I would say Maruti is definitely headed to 12,000. IOC, HP are both in our portfolios, and we are very, very optimistic on the oil marketing companies gaining another 20% from here. I still think ITC is going to outperform lever on a multiple. It still trades cheaper than that. And given that now they are exuding confidence on volumes being back, you are aware all your Starbucks is the paper is the cups which you drink are processed by ITC Bhadrachalam. ITC Hotels, which is just 10%, is seeing chock-a-block revenues on their hotel. They have 7,000 rooms over there. And all the other businesses from agarbatti to matches, ITC is part of your everyday life. So I think that consolidation has been key. And now you could see this stock actually outbeat at least lever in the near term. I think the intermediaries, that is depositories, exchanges, insurance, like yesterday, SBI Life and HDFC Life hit a new high, and brokerages. As a disclosure, I am part of that process. I think they are here to stay for the next many, many years. And as you see, as you are aware that CAMS and CDSL will now see even the your insurance policies get dematerialized. And aside from the holding fees, there is also the transaction cost. So I still think these are very, very good businesses with a longer term view. In the short run, you are right, they may have played out, but I still think particularly insurance companies, the private ones, and brokerages, these are going to head much higher as this whole gamut of equity as an asset class and DMATs and so on, account openings become very, very key, with participation now reaching 17,000-18,000, which is, if you took it on a base, it is just 700 crores a day, which for a country like India is nothing. In the next 5 years, you could even see 5 times that size. Particularly Ather. Ather is owned 100% by Hero, and I think they are the ones which are going to be biggest beneficiary of the valuation which Ola gets on the EV side. Secondly, remember that two-wheelers are anyway on a new high. So I think there is more steam there. I would also like to put on course that I think the four-wheeler space, particularly the new launch of Maruti's EV, is going to set the cat amongst the pigeon. So, take a basket of stocks, but we continue to think Hero Moto and Bajaj Auto on the two-wheeler side and Maruti and Mahindra on the four-wheeler side, along with Ashok Leyland on the CV side, are best place to buy as a basket of stocks. Naukri sum of parts has invested 2,500 crore in 83 listed companies. Just 2 have got listed, Zomato and PB Fintech, which are worth 25,000 on a market cap of 60,000 in Info Edge. 25,000 is in 2 companies, 81 are not listed. So if you are looking for the next play on the millennials or the unicorns, then Naukri becomes a very good play over there. IREDA is up 3 times from its listing price. So a lot of froth may be there, but participation is still hanky. And if I tell you, mutual funds have actually lagged the market, particularly the mid-cap performance of PSUs, because they said we will not touch PSUs with a barge pole. And look what power, infrastructure, and railways and defense stocks have done. So still bullish on a select few, but taking some chips off is not a bad deal, which is why we suggested Tata Power as a run-up to the power stock. I still think there is a lot of value in some other names, and I like this Z in particular. I mean, Z has hit a new high. You can take it down from me. The day you see the back of Goenkas, this stock will maybe double in the next 2 years. You cannot have an OTT platform and a media company like Z trade at valuations which are very, very, below subpar. Same is the case with some of these IT names. Now, LTIM, Kotak, Devyani International, a basket of these stocks can do extremely well. But please stay invested. Don't get caught up with new highs because they are here to stay. Costa Coffee is eating into the market share of Starbucks. Kentucky is now catering to the vegetarian brand, and Pizza Hut is raring to go. It is even eating into the market share of Domino's, so both will survive. But their investments now will give returns over the next few months. And you are looking at one of the best QSR brands. So I am extremely opportunistic on this stock, and this actually can double from here in the next 2 years. Like you rightly pointed out, the poster boy was IT, supposed to be weak on cloud and XYZ. It is the biggest gainer of the rupee weakness. Plus, the underlying strength is that if yields over there are weaker, the dollar is topping out, and inflation is on its way down, then IT becomes a very big, thoroughfare for gaining on the outsourcing side. And Indian companies have moderated and rectified themselves greatly with AI and cloud computing. So I have been bullish on HCL Tech, which hit a new high, Persistent, Coforge, LTIM, LTL. So buy the basket and index is hitting new highs, or invest in an ETF where IT stocks are under focus. But I still think some parts, the Nifty itself, the bank Nifty are giving you an opportunity, because I still think there is a lot of feeling of missed out, which will mean any fall is a buying opportunity. Remodernization from wagons to railheads to everything is being very, very at the forefront of this government. IRB is a clear case. As a disclosure, we've been with the IRB from 16 rupees and recommending on your channel that 24,000 kilometers of pan-India roadways, and now with NHAI and FASTag a compulsory, they are laughing their way to the bank. On the other hand, inflation is toll rates are linked to inflation. So any increase in that means their earnings improve. And along with that, they have EPC projects. So that, as a disclosure, is one stock which is in our portfolio. We also have Texmaco, and we think that this execution may be a little bit of an issue, but the order flows are very strong. So it's across the board, and PSUs are actually ruling the roost. When did you have PSUs now, come up with plans of a 4-year expansion on large projects? I'll talk of one of those stocks, which I think is very, very undervalued. And it just goes to tell you that PSUs are putting more money into CapEx, which is a very, very big positive for the economy. I think ICICI and Kotak are looking very good on the large cap stocks. And in the mid caps, I think AU Bank is making a fresh move. AU Bank has arguably become one of the fastest growing small scale MFSI, which has got the license and now growing very rapidly. Cost of living and cost of, you live once in a lifetime and you want to own the best. And that is what DLF and Godrej have actually excelled in. Both these stocks are in our portfolio. They have almost more than doubled from where we hold, but we are not in any mood to get light on these stocks. We think this is a very strong proxy play to the wealth effect. And Avan, along with that means that steel stocks will be, steel and cement are also hitting new highs. I just heard of JSW Steel. That is one stock which is in our portfolio. And let me tell you, JSW Steel is the best integrated play in the whole country on steel. And secondly, if the dollar is going to go to below $100, steel becomes one of the best plays on the India growth story and the export, with sale also are dominating. So as a disclosure, JSW is in our portfolio, and we are looking at a target of 1100 on JSW in the next 2024.
If you like this video, then like, share and subscribe to ET Now.